In this presentation, we will give an overview of the vendor section, which also can be thought of as the accounts payable section or the purchases section. Get ready, because we're about to engage with Sage 50 Cloud Accounting. Here we are in our practice demo file. We're in the actual Sage 50 software, but you should be able to follow along with the free demo file as well. We're in Bellwether. And we're currently in the customer and sales. We're going to be moving on down this time to the vendor and purchases. So we're going to be in the vendor and purchases section. This is another major section that we want to kind of group in our mind as a separate kind of entity where people will often work in this segment of the organization. So within the vendors and purchases, once again, we want to think about this as kind of a cycle that is going to be happening, and the flow of that cycle, and then the forms that will be included, the data input forms. So remember that anything that's going to happen from a day-to-day kind of component, we want to have a standardized process, and that'll typically be using forms to make the data input easy and the flow of those day-to-day type activities easy. Now, the flow that you will typically see with an accounts payable on an accrual basis, if we were to remove, let's say, removing inventory for a second, then we would typically have bills coming in. We would be entering the bills into the system. That would be with this form, increasing the accounts payable, and the other side then going to an expense, possibly, most likely. And then at some point in time, of course, we will pay those bills. And once we pay the bills, we will be decreasing the accounts payable, and we'll be decreasing the cash. So that's the typical flow that you're going to have within the accounts payable. Now that, of course, assumes an accrual system where we're going to be entering the bills as we receive them and then paying them off, taking it through accounts payable. However, it's quite possible that we just pay off the bills, say, with a check, and that's why the check forms often belong here in the payable cycle. So we'll have the checks here. We also have the 1099s if we have to pay someone, because that's obviously a payable type of thing. If we have to track the people that we're paying for contractors, a reporting requirement in the U.S. to 1099s, then we'll be dealing with those for basically tax and reporting purposes at the end of the day. And the people that we pay, of course, will be vendors. So we're going to call them vendors. People we get stuff from, customers, people we're paying, we're going to say vendors. So that's going to be our vendor list, similar to our customer list up top. Then if we have inventory involved, it gets a little bit more complex then, because when we buy the inventory, one, it's got to go on the books as an asset, right? And we have to track the inventory if we're going to be tracking it within the system. So we have to set that information up with the items in a similar way as with the invoices. In other words, when we invoice someone, if it were for inventory or anything on the invoice, whether it be service item or inventory, we need an item to set that up. If it's inventory, when we purchase the inventory, we typically want an item to be driving that so the system can track that, and we'll be doing that with the sales order to increase basically the inventory, or at least to start the process of purchasing inventory. So the purchase order is a little bit tricky because it's the one form on here. It looks like every other form, and it's got numbers on it and everything. It's a complex form, but there's nothing happening on the financial statements with it. That's when it's tricky. It'll then flow over to the bill. So if I was to enter a bill that happened to have inventory as opposed to just paying off an expense or something like that, then we again would need those items to increase the inventory. It would be increasing inventory basically at this point in time. But the bill then might be created from the purchase order. So let's think about the purchase order real quick, because that's kind of the most confusing component. If we were to purchase something from an outside vendor, let's say inventory, let's say we're purchasing something from like China, we're getting some goods, some cups that we're going to be purchasing or something like that. It's different than what would typically happen if you're going to purchase something individually from like Amazon, in which case, if you were purchasing from Amazon just online, you would pay for it at the point in time that you purchase it, even though you haven't yet received the inventory. Therefore, there would be a financial transaction at that point in time. Now, if we're talking purchase orders, typically what we have there is a request. We haven't made a payment at that point in time. We are requesting, in this case, the cups to be sent to us. And once they get to us, then we're going to enter them into the system with a bill. So no payment has been made at the point of the request. We're saying the things are going to be shipped without any payment being made. Therefore, even though on the purchase order, we're going to have information on what type of inventory we want and payment and how much possibly, we're not actually going to pay for it until it gets here, and therefore there's no transaction. No financial transaction is happening here because we don't have the inventory. We haven't yet made the payment. Then, however, we're going to receive the inventory. We imagine it coming into our port. We get it into our warehouse and we count the inventory, and we can then populate the bill. We can imagine the bill coming with the inventory attached to it, and we can then populate the bill or match the bill with the purchase order and help that to tie that out as we enter that into our system. And at this point in time, then, when we make the bill, we would be increasing the accounts payable just like any bill. However, the other side would not be going to an expense, but rather to an asset called inventory. We have the asset called inventory that we would basically sell at a later time. And then, of course, we would pay the bill. Once we're at this point, we would then pay the bill just like any other type of bill, decrease in the accounts payable, decrease in the checking account. Obviously, we have some more items down here, including the void check, the credit and returns report information. So that's going to be just the overview of the vendor section. Vendor section, again, a large section. If you're talking about a large organization, you can have people just spending their whole time here in the accounts payable, tracking what is owed, and especially if you have inventory involved, it could be quite a lot of information on just the vendor's cycle. So later we'll get into these actual bills and we'll discuss more how those bills are created. Once again, we want to think about how these bills, purchase orders, and whatnot are created, how they tie together, and then how they make it easy, how we can make the data input as easy as possible, and then the effect on the financial statements of each one of these forms. So that's it for now. Let's get out of here.